Monday morning, folks, and a very warm welcome to you on this edition of FinMet Mondays podcast. This past week, we saw a $40 pullback in gold and to some extent, a pullback in silver as well. Sunil, what did you make of these corrections? And what do you think participants are trying to gauge from the markets currently?
It was a week of two halves. Earlier in the week, we saw gold on an absolute tear going upwards. And then on Thursday and Friday, we saw the pullback. I think talking to market participants in New York and London, what they said to me was there were two or three major factors. One is October end was coming. People felt that they had already made a lot of gains in October, and so there was profit taking that took place. That was an initial trigger. As soon as the New York market opened on Thursday, on 31st, people started taking profits. And I think that caused a little bit of a surprise to people. The second driver was the stronger dollar. The dollar has gained a lot in the last few days, and so normally when dollar goes stronger, gold comes off, and we saw some of that trade. But all in all, what the people tell me is long gold is still a sort of pro-Trump trade, and so as the polls show Trump perhaps winning, gold price keeps going higher. So what that tells me for next week is if the result becomes against Trump or looks like going against Trump, then we may see a pullback in gold prices. Trump does put tariffs, then inflation is going to go up, and that's going to be positive for gold. So overall, the market feels that gold as an alternative asset is going to benefit from a Trump victory.
Understood. Thanks, Sunil. Let's quickly jump into the technicals for this week. This is the 4 hourly charts for US spot gold. Firstly, we have seen this pullback and we are currently at 2730 to 2740. This is where the markets corrected to on Friday after a string of positive data from the US. This area that I noticed around 2760 to 2780, I noticed that the volume corresponding to these levels was not really as high as you would expect it to be. Moreover, when we saw a pullback from these levels from the 2780 back to the 2740, we saw a sharp decline in terms of the price volume strength, which is just a relative indication of at what price, how much of volume are we also seeing parallelly. This is an indication that at these elevated levels, 2760 to 2780, there's still not a lot of acceptance in the gold markets until we have some readings and economic data that comes out that favors the metal. We also see that this blue line here is 200 period support. You have this support that is going to help gold. You also see that there are ascending trend lines here, which is also going to be supporting gold around the 2714, 2720 region. So I think just because of the confluence of number of supports here, gold is going to be well supported around 2720, 2730. We wouldn't expect the metal to pull back below and create new lows. But on the upside either, there is not a lot of traction or momentum going on for gold right now, as you can see from these price volume trends. So we'll have to wait and see how gold reacts to that and whether gold is going to consolidate in this range currently or not. On US spot silver, we have a few more indications of what is happening. Firstly, the metal has corrected back to 32.3, 32.4 levels, which were the earlier highs that silver was unable to break about at least a month back. The supports are plenty for silver around this level. First, you have this ascending trendline support all the way from here that is going to help gold. You have this darkish blue 200 period EMA support that is also coinciding with this ascending trend line here. When we draw a Fibonacci retracement right from this area to this area, the 61.8% Fibonacci retracement also corresponds to 32. This is also where you have support here. So there is a confluence of multiple technical indicators that are converging at this 32 area, which is again what I feel is going to be a floor for silver prices, and you wouldn't expect prices to edge below 32. On the upside, one of the things that I noticed is when the metal ascended from this 32.7 area and then rallied all the way to 33.5, 34, that ascent was very rapid. And what that led to is not a lot of time for markets to correct back down to this level around this 33.5 area, which is why the metal quickly fell through after hitting these highs and has come back to 32.7. So this region over here above 32.7 needs a little bit of acceptance, needs a little bit of demand, and this is where bulls are going to struggle even in the coming week, given that we have US elections. So, all in all, to summarize for gold and silver, there are definite flows that are established on the downside in both the metals, just that the upsides at the high levels, they've still not got that level of momentum that we would expect for bulls to continue their long run and edge higher. Thanks, Neil. Let's see again how the markets play out. But till then, thank you so much and goodbye.